I'm getting scared. The buyers are running away from U.S. Treasuries. That means interest rates are rising. And here's the secret to trading interest rates, what a lot of people don't talk about. Always look at the Fed auctions. See what's happening. Okay, that is, in fact, more important than things like inflation numbers and jobs reports. So here's some inside track. Last 2 days, there were two Fed auctions. There was the 5-year Treasuries were auctioned, and the 7 years were just auctioned just a few minutes ago. And both auctions, the buyers weren't there, so that means the interest rates at which they traded at had to be higher than what the Fed issued. So the Fed was expecting 1.3 basis points lower than what they actually sold at. So buyers demanded higher interest rates. They wanted to get paid more to take on the risk of U.S. debt. That is a bad sign. So how high do you think it's going to go? How bad do you think do you think it can get? Well, like I said in my last conversation, is that I think this goes up to the support levels of 5%. I think at 5%, at the 10-year at 5% is when buyers really flood in to the market. So I think it's going to be hard to crack 5%. And I think there could be some news that may push it lower again tomorrow. But outside of unexpected news, I think we're going to see a continued sell-off and start crawling back up to 5%. That means mortgage rates heading, well above 7%. Not good for the mortgage industry, not good for America in general. What do you think is going to take to fix this? How do we get buyers back in the market? How do we get confidence back in U.S. debt? Well, the one way to do it is get our debt to GDP ratio down. The second way to do it is improve productivity and start spending in a way that increases efficiencies in the economy. And that then will cause interest rates to fall. So what do you think about that? How do we get inflation down? How do we get debt down? How do we start being the hub, the place for the world to go to for safe haven credit? Let me know.